So how do these huge energy companies, the ones powering pretty much everything, how do they actually fuel our economy? And maybe more importantly, how are they adapting? I mean, there are massive shifts happening.
Oh,
Right.
absolutely. Economic development booming in some areas, big environmental changes.
Exactly. It's a question that really gets to the heart of, well, what keeps things running?
It's a super dynamic landscape now. These aren't your old school static utilities anymore. They're constantly evolving, trying to balance, surging demand with the push for cleaner energy.
It's a heck of a balancing act.
It really is.
And today, we're diving deep into one of the biggest players right here in the U.S., Duke Energy. We're going to unpack their recent financial performance, some pretty bold strategic moves they've just made,
Some really interesting ones, yeah.
their growth plans, which are ambitious, and just how they're handling both that economic expansion and these significant environmental shifts.
And the great thing is, our info comes straight from the source. We've got the transcript from their latest second quarter earnings call, plus all the detailed financial reports that go with it.
Yeah, tons of data.
A real treasure trove if you know where to look.
So our mission here is to cut through all that complexity for you. We're going to pull out the most important bits, the key insights, basically give you a shortcut to understanding the forces shaping, well, our energy future through the lens of Duke.
Get ready for some maybe surprising facts, but definitely clear explanations. We want you to connect the dots on how these meter utilities are trying to adapt.
Okay, let's start with the financials. Lay the groundwork. Duke Energy reported adjusted earnings per share of $1.25 for Q2.
Yeah, $1.25 say that sounds pretty solid, doesn't it? Especially since they've had a strong start to the year already.
Right. And what's maybe more telling is they seem confident about the future.
Very. They reaffirmed their 2025 guidance. That's the $6.17 to $6.42 range. And maybe even more significant, they're sticking to that long-term EPS growth rate target of 5% to 7% all the way out to 2029.
Wow, through 2029.
Yeah, that kind of long-term visibility, I mean, it speaks volumes about their confidence in their strategy,
Yeah,
right?
definitely a solid foundation. But, the real story is often in the big moves companies make to secure that future. One that really jumped out at me was this huge investment from Brookfield Infrastructure in Duke Energy, Florida.
Ah, yes, the Brookfield deal.
Can you walk us through that? What did it involve, and why is it such a big deal strategically?
Sure. So Brookfield Infrastructure put in $6 billion. It's a minority investment, giving them a 19.7% indirect stake in Duke Energy, Florida.
6 billion, okay.
Now, why it matters so much beyond just the cash is how it really strengthens Duke's overall credit profile. They're now targeting an FFO to debt ratio of 15%.
FFO to debt, funds from operations.
Exactly. Funds from operations to debt. It's a key measure of how well their ongoing business cash flow covers their debt. Getting to 15% is a full 100 basis point increase, a whole percentage point over their old target. That's significant.
So better financial health, basically.
Right. And the real insight, I think, is how this sets them up to essentially self-finance their huge expansion plans. Less reliance on issuing new stock, more stability maybe for investors. It's a very proactive way to de-risk their future capital needs, especially with the economy being, well, uncertain.
Okay, so that massive cash injection helps Florida grow and shores up the balance sheet. But that wasn't the only big transaction, was it? They also sold something off.
Correct. On the flip side, they made a strategic sale. They divested their Tennessee local distribution company, the LDC business, sold it to Spire,
How much?
$2.5 billion, $2.5 billion. And the source material, the call transcript, specifically called it a premium valuation.
Premium valuation. What does that mean in this context?
Well, they got 1.8 times the rate base for it. The rate base is, basically the value of the assets they're allowed to earn a regulated return on. And 1.8 times is definitely at the high end for sales of these LDC assets, the pipes delivering natural gas.
So they got a good price.
A very good price. It's an efficient way to unlock value from something that wasn't maybe core to their future plans and then reallocate that capital.
Okay, so let's put these two together. The big investment in Florida, the sale in Tennessee. What's the combined effect? How does this tie into the bigger picture for Duke?
Right, connecting the dots. These two moves together help finance what Duke themselves are calling record growth ahead. It also gives them, they say, greater confidence in hitting their earnings per share targets.
Especially hitting the higher end.
Exactly. They're aiming for the top half of that 5-7% growth range by 2028-2029. And crucially, the money they raised means they won't need to issue about $3.5 billion in common equity they might have otherwise needed.
Avoiding dilution.
Precisely. Less need for new long-term debt or issuing new shares through 2029. That limits dilution, which existing shareholders usually like to see.
That definitely de-risks their equity plan, like you said. So amidst all this buying and selling, what about the dividend? Are they still paying out to
Oh,
shareholders?
yeah. They're sticking with their plan for 2% annual dividend growth. The idea here seems to be to gradually lower the payout ratio, the percentage of earnings they pay out, while still keeping up with capital needs.
Balancing act again.
Always. Sustainable returns for investors, but also heavy investment in the business's future.
Okay, so strong financials, smart transactions, setting them up. Now, where is all this growth happening? Duke operates in some pretty attractive places, right? North Carolina keeps getting named top state for business.
For the third time in 4 years by CNBC, yeah. And most of their other states are in the top 10, too.
That's got to be a huge advantage for attracting new business investment.
Absolutely, it's a magnet. And what's really interesting is how their own program, this site readiness program, directly helped land a massive project recently.
Yeah. What's one?
Amazon Web Services, AWS. Back in June, they announced plans to invest over $10 billion building a new data center campus in Richmond County, North Carolina.
10 billion. Wow.
Yeah, and expected to create at least 500 new high-skill jobs, too.
So how did Duke's program help? What does site readiness actually do?
Well, Duke played an integral role, according to the materials. The program basically identifies industrial land, works to make sure it's got robust transmission infrastructure ready to go, or easily accessible. It speeds up power delivery.
So when a giant like AWS comes knocking, the site's basically plug and play, or close to it.
Much closer, yeah. They can power up these huge facilities way faster than starting from scratch. Big selling point.
Okay, so these huge projects are coming in. How does that affect the overall customer growth picture? Are regular residential customers growing too?
Yes, they are. They're seeing sustained customer growth from population migration, especially in the Southeast and Midwest. The Carolinas are seeing over 2% growth.
And the big industrial load.
That's expected to really ramp up. The overall load growth, the demand for electricity, is projected to accelerate quite a bit in the later years of their plan, precisely because these massive projects, like AWS, will come online and start drawing serious power.
It's a fundamental shift in demand patterns.
It really is.
So with all this new demand coming online, how are they actually modernizing the grid to handle it? Seems like they've had some wins on the regulatory front too.
They have, for instance, the preservation of the nuclear production tax credits, the PTCs. That was in the final budget reconciliation bill.
And Duke has a lot of nuclear, right?
The nation's largest regulated fleet, 11 gigawatts. Those plants earned $500 million in PTCs just last year.
And that helps customers how?
Directly. Those credits reward carbon-free nuclear power, lower Duke's tax bill, and that value gets passed on to customers. It means lower bills than they'd otherwise be.
Okay, that's significant. Any other legislative wins?
Yeah, in North Carolina, the Power Bill Reduction Act just became law. It lets them recover financing costs for new baseload generation annually. That supports their credit rating and, again, minimizes the cost impact on customers as they build new plants.
And South Carolina.
Not standing still either. They passed the South Carolina Energy Security Act, Act 41. It encourages looking at all sorts of new generation hydro-pumped storage, hydrogen-capable natural gas, even advanced nuclear.
So exploring options.
Right. And importantly, it also aims to streamline the siting and permitting process, get these projects built faster and more efficiently. It's about securing that future energy supply.
Makes sense. Now, I also saw something about them combining utilities in the Carolinas.
Yes, that's another big move aimed at efficiency and savings. They plan to file applications to merge Duke Energy Carolinas and Duke Energy Progress into one single electric utility.
Why do that?
The big reason is customer savings. They expect it to save over $1 billion through 2038.
$1 billion.
By simplifying processes, cutting duplication, adding operational flexibility, just streamlining things across two entities that were historically separate. They're targeting January 1, 2027 for that to take effect.
Over $1 billion in savings yeah, that's substantial. Okay, so with demand accelerating, regulatory support in place, how are they actually expanding generation? What's being built?
Well, the plan is to add over 8 gigawatts of dispatchable power they can turn on when needed across their system by 2031.
8 gigawatts is a lot.
It is. Some of that comes from upgrading existing plants, natural gas, nuclear, hydro. That alone gets them over a gigawatt of cost-effective extra capacity.
Okay, upgrades? What about brand new stuff?
Yep, new projects too. They finalized the EPC agreement, that's engineering, procurement, construction, for their first big combined cycle gas plant in the Carolinas. Construction's already underway.
Combined cycle, more efficient gas generation.
Right. And they've also announced the site for a third combined cycle plant down in Anderson, South
What
Carolina.
about other states? Indiana.
Big project there, too. The Cayuta Combined Cycle Project. 2 natural gas units, almost 1,500 megawatts combined winter rating.
That sounds expensive.
It is. Estimated cost is around $3.3 billion, expected to come online in 2029 and 2030.
So lots of natural gas, but they mentioned nuclear too.
Yeah, they describe their approach as all of the above. They're looking at advanced nuclear where it makes sense. It reflects that need for diverse, reliable power sources, especially with that accelerating load growth we talked about. You need a mix.
Makes sense. Now, it's not all smooth sailing, right? Running a utility this size means dealing with challenges.
Yeah.
And 2024 sounds like it brought some major ones, especially with hurricanes.
Oh, definitely. Hurricanes Debbie, Helene, and Milton hit hard. Widespread outages, really unprecedented damage in some areas.
So how do they recover the costs for that kind of massive cleanup and repair?
They're seeking full cost recovery, aiming for early 2026. And they've already got key approvals. Duke Energy Florida got $1.1 billion approved for recovery. And they're using storm cost securitization, too. That's where they issue bonds to spread the cost over time, softens the immediate hit on customer bills. North Carolina approved that $584 million for Duke Energy Carolinas, $461 million for Duke Energy Progress.
And South Carolina?
South Carolina approved $556 million for Duke Energy Carolinas as well. It just shows the immense financial scale of these severe weather events, billions of dollars.
And beyond the money, that kind of damage really tests their grid, their operations.
Absolutely. Puts their operational resilience under the microscope. And it's not just hurricanes. Remember that heat wave in June 2025?
Vaguely, yeah, hot one.
Record-setting electricity usage in North and South Carolina. Think about that. Every AC blasting and the grid held up. It really highlights their focus on operational excellence, being ready for extremes.
Important stuff.
Yeah.
Okay, besides storms, there's the whole environmental regulatory world. That seems constantly shifting.
Always complex. Take coal ash, for instance. The EPA's 2024 CCR rule significantly expanded the requirements for managing its storage, closure, everything.
And Duke's response?
Well, like many utilities, they're involved in legal challenges. They argue some parts might be too broad or impose costs that are just, unfeasible without significantly impacting customer rates.
Okay, and what about greenhouse gases? EPA Rule 111.
Right, that one regulates greenhouse gas emissions from power plants. Duke said they're analyzing the impacts and, again, participating in legal challenges. But it's worth noting the EPA actually proposed to repeal that specific rule back in June 2025.
Repeal it, so it might not even happen.
It just shows how fluid this all is. Things change quickly, and of course we're just relaying what's in the source materials here, presenting it impartially.
Understood.
Yeah, it really highlights that constant push and pull between regulatory goals and the practicalities of running a massive power system.
So, okay, let's pull it all together. We've talked financials, strategic deals, economic growth, grid upgrades, challenges like storms and regulations. Looking ahead, what's the general vibe? How confident does Duke seem about the future?
I'd say exceptionally confident based on their commentary. Those big strategic deals, the Brookfield investment, the Tennessee sale, combined with strong operations and this clear strategy for growth.
They seem ready for what's coming.
They believe they're well-positioned to handle what they call unprecedented growth over the next decade. They've really leaned into capitalizing on those population and industrial trends in their areas.
And ultimately, it boils down to that dual commitment, right?
Exactly. Meeting customer needs, which are clearly growing and changing, while also delivering long-term value for their shareholders. That's the tightrope they have to walk.
It's a balance of service, reliability, and financial performance in this really rapidly changing energy world.
Couldn't have said it better myself.
Wow, this has been a really fascinating deep dive into Duke Energy. We've covered a lot of ground. Their solid financials, those really game-changing deals, Brookfield in Florida, the Tennessee LDC sale.
And how those directly fuel their growth plans, big time.
Right, and how they're attracting huge economic development projects like that AWS campus, thanks partly to things like their site readiness program, plus modernizing the grid, getting those regulatory wins.
Like the nuclear PTCs and streamlining rules.
And merging the Carolina utilities for potentially huge savings. And of course, how they're tackling big challenges Massive storm recovery, the ever-shifting environmental rules.
Yeah, we've seen how they're actively strengthening their credit, boosting their capital plans, trying to make operations more efficient to save customers money. It really feels like a comprehensive strategy.
Definitely a lot for any utility to manage.
Mm.
Okay, as we wrap up, let's leave you, our listener, with something to think about. A provocative thought, maybe.
Okay, lay it on us.
Given this clear trend we discuss, accelerating load growth, especially from huge industrial users and data centers in Duke's territory, what does that sheer level of demand mean for energy efficiency, for conservation efforts in these booming regions?
That's a really good question. Does massive new demand potentially overshadow efficiency gains?
Or does it make efficiency even more critical? What stands out to you about how this shift might change, well, our whole relationship with electricity consumption in the coming years? Something to chew on.